In this video, we will look at VERIZON Communications. First, we will compare their performance to the S&P 500 from year to date. We will look at the recent drop in price. We will look at the main reasons for that. Secondly, we will look at their dividend. What is their dividend growth rate? What is their payout ratio? So how stable is the dividend? And thirdly, we will look at their current valuation to determine if VERIZON may be a good buy at this price level. So let's get started. First of all, if you want to get updates about VERIZON or other dividend stocks, you can subscribe to the channel by pressing the subscribe button under the video. You will not miss a single new video. Okay, if we compare the performance of VERIZON to the S&P 500, we can see that the stock is down minus 14% from year to date, while the S&P 500 is down minus 16%. So the stock done better than the S&P 500. Also, recently we can see a sharp decline. So what are the main reasons behind the recent drop in price? So I believe this is due to disappointing second quarter results. If we look at the recent report, we can see that the top line number, the revenue, is almost not growing. So if we compare the revenue for the same quarter 1 year ago, we can see that it was 33.8 billion. So the top line number, the revenue, is almost not growing. It is the same like it was 1 year ago. If we look at their number of postpaid additions, we can see that it was negative for the last 2 quarters, negative 36,000 and negative 12,000. So the number of postpaid additions is negative for the last 2 quarters. We also can see that they have high debt level, close to 150 billion. This is much higher than it was in the recent quarters. So VERIZON has a high debt level, and it is higher than in the previous years. And I believe the fourth main reason is lower guidance. So we can see a lower earnings per share expectations, and we also can see almost flat revenue growth, even negative 1%. So we can see both lower earnings per share and lower top line number, revenue. So the growth rate is almost flat. So this brings us to the dividend. Can VERIZON safely pay their dividend? And we can see that VERIZON paid in the first half of 2022 5.4 billion in dividends, and they had free cash flow of 7.2. So the payout ratio is close to 70%. According to this metric, the dividend seems to be stable, although I would like to see a lower number, close to 50%. But they have a payout ratio of close to 70%. So yes, the dividend seems to be stable, but I would like to see a lower payout ratio. Also, if we look at their dividend history, we can see that they managed to increase their dividend around 7% each year for the last 10 years. So the dividend, according to its own history, is growing around 7%. So the dividend increased from 1.2 to 2.6 in the last 10 years, which implies the cumulative average growth rate of around 7% each year for the last 10 years. So what is their current dividend yield? Their current dividend yield is 5.77%, which is the highest that it was in the last 3 years. So the dividend yield is the highest that it was in the last 3 years for VERIZON, which is a positive sign. So if we use dividend yield as a valuation metric, VERIZON may be slightly undervalued compared to its own history. When researching a stock, what I really like to see is that gurus, super investors that I follow, are buying or selling the stock that I'm researching. And in the last quarter, Warren Buffett, famous super investor that I follow, sold his stake in VERIZON. There could be many reasons why super investors are selling the stock. For example, maybe he saw something better to buy, for example, oil stocks, or maybe he saw something in VERIZON fundamentals. So this is very hard to know, but overall I believe this is not a very good sign. Okay, this brings us to valuation. We do not want to overpay for the stock. We will use free cash flow yield as a valuation metric. So this is something I learned from Terry Smith. He uses a similar metric in his analysis. So right now, the free cash flow yield for VERIZON is 9.7%. So what is free cash flow yield? It is next 12-month free cash flow divided by market cap, the current market cap. So for Verizon, it is 9.7%, while the average for the last 3 years is 7.9%. So according to this metric, Verizon seems to be undervalued. The free cash flow yield is almost as high as it was during the COVID pandemic. I like the fact that Verizon has a high dividend yield. They have a payout ratio of close to 70%. I would like to have a lower payout ratio of close to 50%, but according to this metric, the dividend seems to be stable. I do not like the fact that Warren Buffett sold his stake in Verizon. There could be many reasons for that, but overall this is a negative sign. I do not like the fact that the top line number, the revenue, is almost flat. So what kind of return we can expect from the stock? Verizon has a dividend yield of close to 6%. We can add the revenue growth to it, which is almost flat, according to guidance. But if the situation improves, we can add the top line number to it, which can be in low single digits. So we can expect the return up to 10% from the stock in the positive scenario. So if you are a dividend investor, Verizon may be an interesting choice. I believe it represents low risk, but also not very high reward situation. Also, we saw that Warren Buffett sold his stake in Verizon, and we have made a video several weeks before it was visible in his 13F filings. So if you want to know the logic, how it was visible in the numbers, here's the video. If you are not subscribed to the channel, you can do this by pressing the subscribe button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.